Systematic trading, well, you can do that. You can program a computer to do that. And if you do that, you probably don't need a coach. When you say you're going to be a trader, people go, well, you're going to become a gambler. That bit still happens in the West. Oh, you're going to be a gambler.
Yeah,
Trading is just gambling.
absolutely, absolutely. Different personalities of people and how we can marry the personality with type of trading. Because all
Yeah.
of us are unique. We have our own risk appetite, our own mental acumen. So how do I, match make that if I'm like this, I should do this. If I'm like this, I should do this. Is there any formula you can give to us? Welcome everyone to this Face2Face Global. I have with me an amazing personality who is a performance coach for traders. He was a banker. He became a trader. He worked many years as a trader, and eventually he realized that his calling is to make sure that he teach or he help or mentor a lot of people who goes through this emotional turbulences in their life as a trader. So today we have performance coach with us, Mr. Steven. He's 60-year-old, but I guess you will not be able to guess it. Steven, welcome.
Pleasure to be here.
It was interacting. It was great interacting with you yesterday. We know about you. I'm very excited to meet you. Hopefully someday we'll meet in person as well. But for that, we'll park it for later. Let's talk about. You use a fantastic word called performance coach for traders. Now, I would love to know more about it because we have always heard about having a performance coach for athletes, right? Every athlete has his own team or members who are, from different background who is trying to, help the athlete in excelling whatever the person is doing. So please, let's talk about more about this performance coaching for traders.
Yes, yes. Well, the analogy is really good because what often happens is people go into trading thinking it's a technical job or an academic activity. But, having done it myself and having coached, so many traders, top traders, developing traders across nearly 15 years now, I deem it to be a performance activity, really an art. There are obviously scientific elements to it, but if I look at everyone who's succeeded, it's because they've really developed the art and skill of trading and learnt to perform on the big stage. So it is a performance activity. It's about how you turn up. It's about how you do it. It's about your process. It's about your mindset. It's about emotional management. It's about ego separation, and it's about practice and being present to your need as a trader. So it's a performance activity. When you think of it like that, you can think of it like other people in the world of performance. Sports people, musicians, actors, dancers. But also people in high performance roles in many areas. People in the military at the very high level, they have an inordinate amount of training because they're required to perform at key moments in their job. And trading is the same. And these people, they have coaching. They work with coaches. Coaches get them to a higher level. They talk through what they did with coaches. They explore and they examine it. And that's what I do with people in the world of trading.
Sure, sure. So, Stephen, there is a very common thought process that why do we need to learn trading? Just learn technicals and trading can be done. Why do you need a trainer or a coach or a mentor to help you? Because it's a very straightforward. Just look at the price action, look at technicals, look at the entry point, look at the stop loss, and just trade. Why do you need so much of intense training for this?
Well, you can what you're describing is one of two things. You're describing the analytical process, and you're describing trading a system.
Yeah.
Now, if you make it that simple and reduce it to that, then you don't need a coach.
Yeah.
Reality is it's a lot harder than that.
Yeah.
Okay. Trading isn't analysis. Analysis is part of trading.
Okay.
Systematic trading, well, you can do that. You can program a computer to do that. And if you do that, you probably don't need a coach.
Okay.
You hit the button and you hit go. Okay. Although it's a lot more complex than that as well. And I do actually, ironically, work with many system traders. But for example, when there's a lot of ambiguity in any system. For example, let's just say you have a buy above the high of yesterday.
Okay.
Method. And that was it. If it trades above yesterday's high, buy. Okay, that might be a signal you got.
Yeah.
But you can sit there and go, yeah, but what if it's just one tick and then it comes back? Should I wait a bit? Okay. Do I need it to be confirmed? It might trade there once. All this, loads of doubts start to circulate in your head.
Yeah.
What if I buy here and then it comes flying off?
Yeah.
What if I can't buy? What if I hesitate and wait? And then it takes off and it's suddenly 10 ticks higher or 20 ticks higher. What if I can't get my order filled? Okay. What if you get a million what ifs? Somebody else says buy here. Or you try to anticipate it. What if I anticipate it?
Yeah.
The what ifs of trading are really where the challenges start to happen. Well, how much size do I put on? Well, I got standard size, but this is a great setup. Maybe I should put more on. Or later on, when it's happened, you turn around to yourself and you say, why didn't I put more size on? That was a great trade, great setup.
Yeah.
Or you might go, why did I put so much size on? I broke all my limits and all my rules, and now I've got a huge loss. Because you felt overconfident. So you've got things like confidence and overconfidence and doubts and anxieties all coming in around that point of execution.
Yeah.
You got so much noise happens there. It's rarely the signal is just black and white. And even if it is, rarely is the need, is the way you can act. Sometimes you get a tick above the high of the day and it immediately jumps 5 or 10 ticks. And now you're, oh, do I buy here?
Yeah.
I was supposed to buy and I didn't get it. The market immediately, orders came in and took it higher. Yeah. Now my system says I should be buying, but I can't buy at the level my system says, which really questions, where is the system viable? Because that happens all the time. Yeah. You might be using a system that said, theoretically, this is where you should buy and sell based on backtesting.
Yeah.
But actually, backtest doesn't include things like gaps and lack of liquidity. Those aren't priced into the system.
Interesting.
The system might be unrealistic that you're actually trying to execute. So there's a million things where all these performance anxieties come into your head.
Yeah. But when we are creating algorithms, we are trying to objectify all these what ifs. So how much is possible, we try to do it, and eventually we let the system take care of other open-ended what ifs, which is not in your control.
Okay, so it depends really on how simple you make the system.
Okay.
And again, are you talking about cash products or exchange traded products?
Yeah.
Futures, they have a rollover. How do you structure that into the system? The rollover. How do you know when to roll over?
Yeah.
Options are even harder to systemize, far harder to systemize, because there's so many different elements within them. Some of the problems I've seen with system builders over the years, and then back testing of it, is they can't actually trade the system because it doesn't fit their personality. Okay, so they create a system and they haven't actually walked through the back test. They just back test it, and you've got all these different data points. This is your return. This is your win rate. This is your loss rate. This is your ratio. This is your Sharpe ratio, whatever. I built a system, one of the very early systems back in the 1990s, to trade some of the ideas I had, and the performance was outstanding. But I knew I could not trade that system because it was slow. It would grind. My bosses, definitely the people who owned my money that I was trading, would not sit with it. So if it was up, if it was ahead, I know they'd be saying, take the profit. And I'd be saying, you can't, you have to wait for a system signal to take the profit. Or cut the loss, it's losing too much. And I said, can't, you have to wait for the signal in the system to cut. Or why are you long here? This is a crazy level. The entire market's selling off. Well, I've got a buy signal. When you're dealing with other people's money, unless it's your own, it can be a nightmare. And even when it's your own, you've got that internal ego doing the equivalent of screaming at you as if it's somebody else.
Yeah.
I always think the great scene from The Big Short with Michael Burry, where he's drumming and he's got his investor screaming at him to take money, take the position out of the market. That's often what it's like trading. He had a system. It wasn't a non-discretionary system, but it was a system. Everyone's trading a system in some way.
Yeah.
And his investor couldn't live with it. He struggled to live with it, to be honest. But he did it. I see this all the time, and I see people who built these brilliant systems on back tests, and then they run the system in a forward test, and it doesn't work. And there's lots of reasons for that. Simply because what's happened tomorrow hasn't happened yet. You could run any system going back 20 years. The week before the COVID experience, or the week before Ukraine went into Russia went into Ukraine, pardon, or even last August, just passed, when we had the Bank of Japan, those situations come along very rarely, and they may not be priced into the back test. So what's happened tomorrow has never happened yet. That's one thing. The other thing is the data is not always accurate. Even back in the 90s, when I built that system with very simple data, I had to go back, and it was professional data, and clean it all. I had to go back and look at every single day's levels, high, low, on a daily chart. Okay, now imagine trying to do that on a weekly chart and a minute chart. Yeah. I had one client who built a system who had to buy 3 sets of data for the back testing. And he put them all alongside each other, and they all produced dramatically different results. These were purchased data, okay, intraday data on futures. So you can imagine he's run a back test on the first set of data, and it says you need these parameters to make money. And then he's run it on the second set of data, which is for the same period and same product. And it's given him a completely different result. And again, it happened a third time with a different set of data.
Oh my God.
He then had to go through and clean up. He spent more time cleaning the data than building the system. So eventually he had a really clean set of data. Okay. The quality of the data that goes in is not accurate. And then because he'd been a futures trader, he understood that the data isn't going to represent certain things very well. So you've got the rollover of the futures contract, which has to be done manually. Okay. And then each of those 3 sets of data handled the rollover differently. So he had to create his own formula for looking back at the rollovers that could then sort of give him a best fit. And then he had to think, okay, that gives me this set of data. This is the best system I want, but this isn't something I want to trade because the parameters don't suit who I am, my style, my ability to be constantly in front of the market, or my inability to be constantly. So I had to work in a certain way. So he had to build huge buffers into his trading, then the back test with the buffers built in. So, for example, he went through a really robust back test where he built in lots of slippage and said, now see if you can find a set of a model with all these slippage elements built in that still produces positive return. And he was able to do that. But he had been a trader for 10 years by that point. He understood the nature of liquidity.
Hmm.
Your back test won't say if one contract was done and then the next ability to get 500 contracts or 1,000 contracts was 5 ticks lower or 10 ticks lower. It'll just say, well, you executed on that price.
Hmm.
Okay. So even using a system, it's really challenging.
So how do we approach? I mean, so let's take a case study of someone who is just beginning the journey of becoming a trader, and the person is okay to invest number of months or years to see
Yeah.
success. So could you
Yeah.
just give that step by step ABCD approach of how do we start?
Okay. So and as I explained in the chat yesterday, um, you have to understand what trading is. There's two types of trading.
Hmm.
And let me just call it setup trading and sell side trading.
Setup and
So, setup and sell side.
okay, okay,
Okay. Setup is, I also call it player. So the analogy here is the blackjack table analogy.
okay.
Okay. The house sits one side of the table, that's the sell side. Okay. And the players, the people trying to do setups, they sit the other side of the table.
Okay.
Okay. Now, people such as myself learnt the game in a house, in a casino. It wasn't a casino, it was a bank. But think of it for this model, the
Yeah.
blackjack model. We learnt to play the game from the inside. We have edges and advantages being on the inside. The house has a roughly 2% advantage in a blackjack game against
Hmm.
the people opposite it, the players. Okay. The only way the players can win over time
Hmm.
is to have a strategy, which is a setup, which is a card counting setup.
Hmm.
But they can try and cheat, but they usually end up with broken legs. Um, the only way they can do it legally is by counting cards, waiting for a specific setup that has a high probability return,
Hmm.
and then going larger in size at those moments, and then sticking with the setup and allowing it to play out.
Hmm.
And that way they can flip the odds their favor from being against them. And whilst it's very easy in theory, it's
Hmm.
incredibly hard to do in practice.
Hmm.
Okay. Um, that is what your clients, I believe, will be doing. If you're a retail trader, it's impossible to play the house game, the sell side game.
Right.
Okay. Um, you can in a prop firm that might have the right setup. I'm not talking about the prop firms that give you money to trade. I'm talking about real prop firms where they actually replicate the house game and they fulfill the role of an exchange, the former floor exchanges, where they're really making markets. Um, and yeah, you can do a little bit of that if you want from home once you're experienced of doing it at the inside. So there'll be some people who may be able to do it, but really the odds of you being able to succeed against big firms doing the same thing are incredibly low, almost sort of ridiculously low. You really don't want to be chancing your arm doing that. You want to learn to do the other way, which is the setup game, where you're looking for favorable risk reward probabilities. And that requires a system. It requires experience, it requires knowledge, it requires a lot of skill, and it takes a long time to learn.
That's why exactly my next question. With your experience, how much typical time one would need to put in market as a disciplined individual to realize that my system is here. I probably have arrived.
Okay. Well, I know people who have made it in 2 or 3 years. They're
Okay.
very rare.
Hmm.
They usually had help. They had mentors. They usually worked inside a firm, or they had a background which had exposed them uh, to trading or something similar to trading. So they
Okay.
already came with many of the abilities within them, or the experience within them, or the knowledge or know-how from some previous career. Okay, but if they're starting raw, let's just say I use the example of a dentist who decides he wants to give up dentistry and start trading. I think you'd be looking at probably on average a 5 to 7 year journey of doing it every single day to say, I am now competent and can do this for the rest of my life. Doesn't mean they would have been profitable earlier, most of them. They'd have started being profitable earlier. The first 2 or 3 years would have been really trying to find a way, trying to understand it, trying to fathom it out. They may have been lucky and not really lost much money in that time. They may have even scraped a very small living doing it. But, you have to remember that there's an ever increasing pyramid of, think of it like a pyramid, but everyone joins it. And most people are going to get taken out of the game in the first 6 to 12 months. Okay, the next lot will be taken out in the 1 to 2 months. There'll be a smaller group left, and you really want to survive to be in that next group. Then suddenly your chances of making it start to grow significantly because it gives time for you start to understand the way the markets work. You start to develop a kind of unconscious competence, okay, where you start to do things without knowing necessarily what you're doing. Okay, and that's the same in any job, in any career. Trading is no different. If you're, and I'll talk to your audience because, there's probably a lot of people familiar with cricket there. Okay, if they just pick up a cricket bat now and start playing, they're not going to be very good for a long time.
Absolutely.
But if they stick at it, if they have some training, if they read about it, if they practice regularly, slowly the skills will come to them. Slowly they'll start to be able to play a forward defensive. Slowly they'll start to realise, against weaker bowlers, how to move the ball around a little bit, how to understand the positioning of the field. Whether they should be playing a game of, just hitting singles or whether they should be hitting it out, how to play with the player opposite, when to run, when to not, when to start striking out. But then they might start, as they do that, they'll then go up against a higher level, against better bowlers and having better batsmen around. And then it gets harder again and they go down. That sort of thing is happening in trading all the time without realising it. You're going up against better people. You don't realise it. So when you're trading, each day you're trading in a market, you're trading against superstars. You don't know who they are. They're on the other side of the market. You're trading against big houses. Okay, they may be on the other side of your trade sometimes. They may be with you in the same move. You just don't know. And there will be a lot of luck in the early days as well. This is where it's different. If you pick up a bat and just start playing well, that's unlikely if you've never picked up a bat before. That can't happen. But trading, there's an element of luck there. You may land, you jump on a bandwagon immediately. A lot of people get attracted to trading during these bandwagon periods where something is new and something is working. That happened to me in the 80s. We had what were called penny stocks.
Okay.
There's a real bandwagon with that. You can think of, of Bitcoin a few years ago, or the small cap craze, a few years ago. During the COVID, there was a craze. There were bandwagons. Things would just carry on rolling forward. So you buy it and it feels easy and you buy more and you go, yeah, this is easy. I'm good at this. But you're not. You've just jumped on a bandwagon. You're not good at it at all. Logic says you're not good at this. You don't have that in cricket. You can't just pick up a bat and suddenly be, hitting a century with your first innings.
Absolutely. I think this is one analogy with all of us in India understand. The cricket, yes, it takes a lot of effort, and the probability of becoming a successful cricketer is actually a low probability event.
Yes.
I mean, many people get coached, and finally only few will emerge in that, top league of successful cricketers.
Yeah.
But trading is such a thing which has been also glamorized, as you said, bandwagon, and it is quite glamorized where it has been made very easy to do. But we all know that how difficult it is and it needs a lot of patience. So coming back to my query that, if you have to give a roadmap to every individual that, first do this, then do this, then do this, what could be a typical, let me call it a graduation program, a 3 to 4 year graduation program to become a trader?
Well, it's interesting because there never has been. I mean, it's always been a job where you learn by getting thrown into it.
Yeah.
Actually, this is like most performance activities. You can't learn to play cricket from a book.
Yeah. Yeah.
You have to pick up a bat and you have to have someone bowl at you at 100 miles an hour with a great big heavy ball that could kill you if it hits you. And you have to duck a little bit or learn to get. So you obviously want someone a bit slower playing with you at first. Um, that's kind of how you do trading, and it's you go in small. Some people pay per trade or they go on simulators,
Mm.
which isn't a bad way to start. Although you must realise that it's not the real thing, but at least you get a feel for it. You can start to see how markets move a little bit.
Mm.
Or I actually prefer people to just go with a very small account and trade minimum size, and do that for a long time and just sort of get a sense of it.
Mm.
Um, and see, what's their account balance. See how it disappears usually very quickly.
Mm.
Um, you know, you're much better off losing a small account balance than a large account balance in your
Yeah.
first game.
Yeah.
And that's your tuition fee, by the way. Okay, don't think of it as money lost. Think of it as a tuition fee.
Yeah.
Okay.
Are you comfortable with simulations? Right? Because there is also a school of thought which says that once you are doing simulation, you're so used to playing. Because simulation is like you're not serious. Like you can deploy $1 million in Tesla in simulation. But actually, once you start thinking about trading, the world is very different. And there's a disconnect between what you have done in simulation and what happens in the real market.
Yeah, yeah. Listen. Most people I know have succeeded in the big prop firms, proper prop firms. Started off in a simulator for about a month,
Oh, okay. Okay.
and it worked for them.
Okay.
I'm not going to knock it. I personally was never a fan of simulations, but for a lot of people it works. But you have to realise that it's fake. If you learn to fly a plane on a simulator, you're not going to walk out and be able to fly a jumbo jet the next
Yeah.
day.
Yeah.
Okay, but
Yeah.
it gives you a sense of where the controls are. You can ask some questions about the basics.
Okay.
You can realise how easy it is to crash the plane. So you can do all of that on a simulator.
Okay.
Um, what you don't have the emotions. You don't. You're not dealing with real money.
Yeah.
Uh, I actually have one client or a couple of clients who they've only ever learned the game through simulation,
Okay.
and they can't pull away from it. They're just hooked to the simulator. And
Okay.
actually, that is the challenge they have, because I try and push them off it. I say, listen, you've got to leave this now.
Hmm.
You have to play the real game because it's just not real money. You don't have the real emotions.
Right.
You have to feel the real emotions.
Right.
You have to feel what it's like to either blow up or to be wrong in the real world. So it's good to a point, but I keep it short. Keep it very short.
Okay. Okay.
Okay, and then try with real money. Keep the money small, because again, now you're just trying to learn with some real money.
Okay.
This shouldn't be the capital you'll use when you're actually trading. I don't know what the size you are, but if you're going to use, I don't know which market, let's say you're going to use 10 or 20 dollars a tick. I'll keep it in dollar terms rather than your local currency. Practice with $1 a tick or half a dollar a tick, that sort of thing, just to start getting a feel for, because liquidity is the key. You have to understand liquidity. Till you have a strong understanding of liquidity, you're always going to be vulnerable to failure.
Got it. Got
That
it.
you can't learn liquidity, in my opinion, on a simulator.
Got
And
it.
you don't want the first lesson you have on it when you get your backside handed to you on the proverbial plate, which will happen in your full size balance.
Right.
Okay. And that first lesson you where you start to go, okay, now I get what liquidity is. Okay. That'll be the greatest lesson you'll ever have in trading.
Right. 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 Moving forward, When I think about trading as a serious occupation, uh, as we discussed earlier, it's the sea of emotions which we have to deal with, right? And you need an ecosystem which is helping you to handle the emotions, which is basically you can call it coach or mentor who should be there with you to take care of you when you need them the most. But at the same time, there is an audience which is very deeply connected with you, which is your family, right? And typically, at least in India, we have seen that stock market trading is not one of those highly sought after occupation as far as social recognition is concerned. I don't know about what is there in UK, but in India, it says that if you're a trader, that means you didn't get to do any other job. That's why you're doing trading. So how do you balance things where you are dealing with emotions which has been gifted by market, and then you have also have social stress and pressure of uh, probably getting recognized from the social setup.
Yeah, yeah, it's very interesting. And I think that's a bigger problem in India than it is in the West.
Okay, okay,
Um, and I know, I work with lots of traders from Indian backgrounds, incredible traders. Um, both, I would say, not just Indian, but not sort of in Middle Eastern as well. It's a very common thing. African. It's a very common thing for people who are, let's say, more middle class. To their families, want them to become doctors or accountants or lawyers, or it's kind of seen as the path, and there's a lot of, what do you call it, social stigma attached to it.
yeah.
There's a lot of social respect, and I think people, and this is still true in the West. When you say you're going to be a trader, people go, well, you're going to become a gambler. You know, that bit still happens in the West. Oh, you're going to be a gambler.
Yeah,
Trading is just gambling.
absolutely, absolutely.
You've got two elements to that. You got one, you're not following the path of becoming a respected profession, and two, you're deciding to do what many people see as really chancing,
Yeah,
playing a game of chance. Whereas, the other thing also, you not only do you get respect from it, but you get a steady and good income.
yeah, yeah.
Um, I don't have the answer to that. It's a personal choice people have to make. Okay. Um, I can't, I've never experienced it. I've heard of people who've experienced it.
Okay, okay.
Okay. And they've asked me the same question: what do I say? And I say, well, I can't tell you what to say, but that's not really the issue here. The issue is, what do you want to do? And do you think you can do it with that? There's always things in your environment.
Mm.
That just happens to be one, but there will be many things in your environment affecting you. Okay. So it's not just that. And then you have to decide, well, what am I going to do? You know, I kind of had the opposite thing a little bit. When I was a trader, obviously I had a very good income from it. And then not so much my wider family, but when I told my wife that I'm going to become a coach, she said, what does that mean? I said, well, I'm not going to have any income till I get clients, and it's going to take a few years to get clients and, build up the business. And, we won't be having any income for a couple of years. And she was horrified, because this was the other way around. This is coming back from something which has always
Oh,
produced a consistent and good income,
yeah.
to deciding to go. And it worried her. What if this doesn't work? What if you can't get clients?
And in
You
India,
know,
it's the other way around. I mean, if you start a teaching venture, people are comfortable because there are a lot of learners in India.
yeah,
And you want to become a trader, then people are like, what are you doing? What's the point of trading when you can teach people?
yes, yeah, but you know, it, it's a very entrepreneurial activity. And if
Mm,
you're an entrepreneur, there's no guarantee whatever you're going to do is going to work.
absolutely.
You can almost go back to the point of saying, well, the success rate of traders is not so dissimilar to the success rate of entrepreneurs. We hear about all the great entrepreneurs, the people that have made it. We don't hear about the many that tried their own small businesses and had to give up because they ran out of money or never weren't able to get enough clients, or, product got damaged. Their losses, that's an entrepreneur's losses.
Yeah.
So it's a different way but it's also looking at the same thing in many respects. They're both very challenging activities.
True. Stephen, I also want you to touch a bit about different personalities of people and how we can marry the personality with type of trading. Because all of us are unique. We have our own risk appetite, our own mental acumen. So how do I, match make that? If I'm like this, I should do this. If I'm like this, I should do this. Is there any formula you can give to us?
Well, I think what you'll find is you'll probably start to gravitate towards a style that suits your personality.
Okay.
So I described earlier on an example of a system that was very slow moving, that gave delayed signals, that that was very much a long-term system. That didn't suit my personality. I knew I wouldn't be able to run it. I kind of have an action orientation. I like to be engaged. I like to be involved. Okay. I like to be active.
Okay.
So when you look at my style of trading that I evolved, it really fitted that. Okay. And when I do a psychometric profiling test when I work with clients, and I like to try and understand their system and method and how closely the way they're doing it aligns with their personality.
Okay.
Now, sometimes I see people working in ways which are completely misaligned with their personality.
Okay.
And often because they've learned to trade like that from somebody else.
Okay.
But that person was trading in that way because that style suited their personality. And then I see these people trying to do the way the person they learned from was doing it. And they're just doing something which wasn't right for them. When they start to realize that, they now have a choice to change the way they work, which of course means there has to be some unlearning and relearning. But, for me, it's not, and I always say to people, because people ask me often, what's the personality that's best for trading success? And there isn't one. Every personality can succeed, and I've seen it. I've seen people from every different personality type succeed. What's the most important thing is to work in a way that completely aligns with who you are from a personality aspect. Okay. Some people can handle lots and lots of risk at the same time and go to bed perfectly fine. Okay. Maybe too much risk, that could be counterproductive. Maybe they've got too much on. That would be what we would call a very adventurous type. Okay. They tend to get taken out a lot. They're the ones who tend to get taken out of the game early because they put too much risk on when they're not really developed yet in it. Okay. And then you've got the opposite type, the more risk averse type, who like to be a little bit slower. They like to take their time learning. They're a bit more risk averse. Okay. They may trade more systematically. They'll use a lot more, they'll do a lot more detailed analysis behind their work. Okay. Whereas the other people, they can be quite light on analysis. They'll very quickly build the story up and back it. The people who work in that way need to find a style that suits them. They'll keep a narrow field of trading, just maybe 2 or 3 trades in a small section of markets at any one time, usually for relatively short term. They might do it a little bit longer, but they can't sit offside for very long. They can't sit underwater for very long. So they have to start finding a style that is suited to that. You've got some people who are much better at running a portfolio of derivative products.
Yeah.
They don't really have any directional risk, but they try and take the relative value out of the sort of the spread out of the market. And you've got other people which are incredibly excitable and intuitive, who trade almost off the top of their head on a daily basis. They need more structure.
Mm.
People, the other side to them, have got too much structure and need to listen to their intuition a bit more. Some people are built to work systematically. That's their edge. Build a system. They like a rule-based approach. They like to know the boundaries. And if that's your personality, then you work in a way that aligns with that, because then you're going to feel more comfortable. You're going to have a process you're comfortable with. When you're comfortable with a process, you can sit with it, even when it's not working or it's going against you. Okay, because you trust it. You've got trust in it because that aligns with your personality. And you're more likely to back yourself. You're more likely to then put more risk on and sort of build the system out, develop it. So it all comes starting from a place of aligning who you are to the way you trade.
And this is more, I mean, there will be trial and error, right? It will take a couple of years before you realize that you're made for this. And it may so happen that you can't realize and it's just lost. You can't do anything about it. You have to leave it, isn't it?
There is the point where you start to think, the one thing we must always remember is income.
Yeah.
We need food on the table. We need to pay our rent.
Yeah.
We need to over our head. There's your most basic needs have to be dealt with. If trading can't provide for that,
Yeah. Yeah.
okay, or you spend too long developing and learning it, and you think, well, yeah, I haven't got another source of income.
Yeah.
How am I going to? It's one of the reasons why I often encourage people to try and have. So this is one of the great problems. If you try and have another source of income, you're going to put less effort into learning and developing trading, and it's going to take longer.
Yeah.
You don't have another source of income. You're relying on really getting profitable very quickly.
Yeah.
Which is luck.
Yeah.
Okay. This is all part of the calculation. Okay. When you're young, when you live at home, it's a lot easier because, hopefully your parents are providing for you, and you only need to make a little bit of money. A lot of really successful traders did it when they lived at home with their parents. So they didn't have big expenses at the beginning, so if they didn't make any money, they still lived, they still ate. Having another provider. I know some people who've got partners, sometimes wives or husbands who have a good income, and they do come to an agreement where they say, look, this is going to take many years to learn, but you have an income that keeps us going, that sustains them. Maybe the person who's doing the trading has a small income still from some business. Maybe they do. A lot of people who do consultancy do trading because they have a bit more time, and they can dip in and out of that job. They can dip in and out of consultancy. Trying to have another income whilst doing it as a retail trader, and then slowly you let go of that. I work with one brilliant trader here, retail trader, who was an electrician for, the first 10, 15 years of his life.
Okay.
And then slowly he got into trading. He started working 1 or 2 days a week and doing the electrician job the other days. And over 3-4 years, he got better and better at trading. So he was able to earn an income from it. And he hasn't been an electrician for 10 years. Wow. The beauty of it is if it ever fails, you can always go back to that.
Lovely.
Relearn it.
So it's ideal to have a existing skill set in something and have some recurring income before you try to acquire a new skill set of trading, and then the transition from that to this can happen, but it will be a time-taking and maybe painful transition. It's not going to be as easy, right?
Yeah. There may be people, and I never want to say, maybe people who hit the ground running, just start making money from the beginning, and it goes really well. I haven't met that person yet, but I'm not saying it doesn't happen. I've met people who went really well for 2 or 3 years, and then they lost everything. And that was the shock one. And you do hear stories like that quite commonly, because they're trading the wrong style, but it was working for them for a while, the wrong approach. But it was gifting them money every day, and they had the wrong risk management structure. for them and their situation. They hadn't realised how much they were risking all the time. I've had people who have worked inside prop firms who managed to earn an income because they got a little bit of pay from the firm, who started pretty well. And in fact, there's 3 traders I worked with featured in the last Market Wizards book, unknown market wizards.
Wow.
And they started off in a prop trading firm. So they had a small income. They lived at home. It was a great example. They lived at home, they had a small income. Or they had, in one case, a girlfriend who was, earning quite good money and was able to sustain them for a while. But they learned, they had great mentors around them, great teachers, people who had been there, had been done it for 20, 25 years, who could really show them the ropes. And they gave them capital. The model worked that they gave them capital to trade with, to start with, and they risk managed them. They managed their size, and they taught them their method. And then they took a cut from them. That was the prop. That was a prop firm in London. It's not around anymore. And there's not many of that type of prop firm around anymore. There are still some. They're rare stories.
Great. Amazing. Steven, that was real masterclass on trading psychology, and you have touched very critical aspect of how to build a solid mental model to become a successful trader. It was a pleasure talking to you. Thank you so much for giving your time to us, and I wish you best for your book further. And we need more performance coach like you in this world of complex trading. Thank you so much, Stephen.
Thank you, Vivek. Thank you.
Thank you.
Investments in the securities market are subject to market risks. Read all the related documents carefully before investing.